Welcome to FinSights Daily by Finvestin, where we cover the daily updates from the world of finance that impacts your day-to-day life. I'm your host Narendran. Quick reminder, play this episode at 1.5x for a better experience if you are short on time. Today's episode is packed with three major developments that could impact your money decisions. First, gold has finally hit the psychological 1 lakh mark. We will break down why this matters to you. Then we will analyze US Vice President JD Vance's high stakes visit to India and what the ambitious trade talks mean for our economy. And finally, some practical financial wisdom from market veteran Vijay Kedia that you can apply right away. So let's dive right in. Gold hits new heights. Gold prices have been absolutely on fire lately, breaking records we have never seen before. As of yesterday, gold has reached 1 lakh mark per 10 grams in India and $3,430 per ounce globally. To put that in perspective, gold has gained around 26% just in few months of 2025. That's extraordinary performance for what they consider it as boring asset. But why is gold surging so dramatically? Well, it's a perfect storm of factors. First, we are seeing significant weakness in US dollar, which has fallen to a 3-year low. President Trump has been publicly criticizing Federal Reserve Chair Jerome Powell, not exactly something that inspires market confidence. When the dollar weakens, gold typically strengthens as investors look for alternative stores of value. Then there is the inflation situation. While official numbers aren't alarming, many everyday Indians, and I'm sure many of you listening, are noticing your grocery bills climbing faster than your salary. Gold has always been as protection against inflation, especially in uncertain times. Speaking of uncertainty, the escalating trade tensions between US and China have investors worldwide looking for safe haven. And what's the traditional safe havens? You guessed it right, our favorite yellow metal. So, what does this mean for you? Well, if you have already owned gold, congratulations. But don't get carried away with FOMO if you don't. Remember that gold hitting psychological barriers like 1 lakh can sometimes mark temporary peaks. As always, consider your overall portfolio balance before making any impulsive decisions. And moving on to our second story, US Vice President JD Vance visit to India and his meetings with Prime Minister Modi. Now, this is not just a diplomatic photo op. There are some curious economic implications here. The headline goal is ambitious, doubling bilateral trade to $500 billion by 2030. The first phase of this agreement is expected by this May 2025. India is considering significant tariff reductions on over $41.8 billion worth of imports from the US, one of the largest tariff cuts we have seen in years. This could eventually mean lower prices for many US products in Indian markets. The negotiations are targeting several key factors. For pharmaceuticals, this could mean both opportunities and challenges for Indian generic drug manufacturers. Electronics might see lowered import duties, perhaps making those iPhones a bit more affordable. Agriculture and textiles are also high on agenda. A particularly interesting aspect in the focus on digital trade and data flows. As India's tech sector continues to grow, the policies around cross border data will be crucial for many startups and IT companies. There is also a new MOU to enhance cooperation between startups in both countries, potentially opening doors for Indian entrepreneurs to access US markets and funding. On the defense front, there are discussions about procurement and co production of US defense equipment, deepening the strategic partnership between our nations. Of course, the elephant in the room, or I could say the dragon, is China. Beijing is closely watching these developments, seeing them as a part of US strategy to counter Chinese influence in the Indo-Pacific region by strengthening ties with India. For Indian investors like you and me, These developments could create opportunities in sectors that stand to benefit from increased US India trade. Companies in pharmaceuticals, IT services, textiles, and defense suppliers might see positive impacts if these agreements materialize. And finally, let's turn to some practical financial advice from one of India's most respected market veterans, Vijay Kedia. For those who aren't familiar with him, Kedia started his journey just with 35,000 in 1989 and built a multi-crore portfolio through disciplined investing. He is known for his early investments in companies like Aegis Logistics and Serra Sanitary Ware, which delivered returns of over 100 times. Kedia recently shared some pearls of wisdom that I think are particularly relevant given the current market volatility. His first point really struck me. It's not your salary in lakhs that makes you a millionaire. It's your savings in lakhs that do. This is so important in today's consumer culture where we are constantly bombarded with ads telling us to consume, spend, and overspend. In simple words, Kach karo, bikari raho. That's the motto behind all these ads. He is quite critical of the live for today mindset that's becoming increasingly common. Kedia points out that in countries like US, this attitude has led to many people living paycheck to paycheck with no emergency savings. This is especially relevant for us in India, where we don't have the robust social security systems that are found in some Western countries. The responsibility for our financial future lies majorly on our shoulders. Kedia illustrates the power of compounding with simple example. Investing just 50K annually for 20 years with a 12% return can grow to over 5 crores. That's the magic of starting early and staying consistent. For stock selection, Kedia follows what he calls the SMILE principle, investing in companies that are small in size, medium in experience, large in aspiration, and extra large in market potential. I particularly love his investment philosophy. Quote, buy like a bull, sit like a bear, and watch like an eagle. Unquote. In today's market environment with gold soaring and geopolitical uncertainty, this patience and vigilance is more important than ever. And coming to the last part, let's quickly recap what we have covered today. Gold has hit the historic 1 lakh mark amid global uncertainty and dollar weakness. A reminder that diversification remains crucial in volatile times. Second, the US India trade talks show promising developments that could reshape several sectors of our economy in the coming years. And Vijay Kedia reminds us that wealth building is more about consistent savings and disciplined investing than chasing high returns or high salaries. As we navigate these interesting times, remember that financial decisions should be made with a cool head, not driven by headlines or FOMO. If you found value in today's episode, please take a moment to rate and review us on your favorite podcast platform. We are available on major podcast streaming apps like Spotify, YouTube Music, Apple Podcast, and even in Amazon Music. Well, that's all for today's FinSights Daily. Thank you for joining me. This is Naren signing off. I'll see you on the next episode with fresh updates from the world of finance. Have a wonderful day and remember, stay financially savvy.